Hi, this is Dr. Charlie Peterson. I'm the author of Dude, Where's My Profit? The Accounting Finally Makes Sense mini course. Today I wanted to talk about an adjustment for a current asset, in this case supplies. I've made up a problem here with a series of transactions that we're going to record directly into the T accounts, and then the last transaction will demonstrate how we handle the adjustment for supplies. Alright, so let's follow the instructions. It says enter the following balances in the ledger. Here's cash, supplies, number 20 accounts payable. I'm going to abbreviate. Number 21 is notes payable. And 50 is supplies expense. So now we're going to start recording the transactions. We borrowed $1,500 from the bank, signed a note payable for that amount. All right, so we know that we're going to be adding $1,500 to cash as a debit, and we're going to be putting in $1,500 to notes payable as a credit. Left and right is equal. Transaction 3, on February 3rd, we purchased $300 supplies on account. All right, now what we're going to do is we're going to charge those because it says on account, but they still are supplies. So we're going to put $300 here, and we're going to record a liability of $300. It means that we owe that amount of money. On the 10th, we purchased $50 worth of supplies and paid cash. All right, well, now this transaction is complete because we don't have to collect or pay for our accounts payable. Then it's on the 19th, it said pay the balance in accounts payable. Well, the balance right now is $300, so we're going to debit cash on the right side, and we're going to debit accounts payable $300. So right now this has a zero balance in it. All right. Now we take an inventory of supplies, and there's $100 worth on hand. Well, we see that we had $350 to start with. There's $100 on hand, so we conclude that because we can only take an inventory of the supplies that are there, that 250 have been used up. So I'm going to decrease my supplies account by $250. These represent supplies that were used up, and I'm going to increase supplies expense by $250. And that becomes the adjustment. It's an adjustment. It's an internal transaction, does not involve anyone outside of our business like the other transactions, which were daily transactions. When we balance out the account in supplies, you'll notice that we have $100 balance, and this has got to agree with our ending inventory because those are the supplies on hand. Okay? If any questions, go to my website, contact me, notify anybody that you know that might be interested in these videos if they're struggling with accounting, Financial Accounting 1, and thanks for viewing.